Tell you what, let's get Farah Mourad, who's the Senior Market Analyst at Equiti Group, who's joining us now to weigh in on the situation. Hi, Farah. Thank you so much for taking the time out and joining us today.
Thank you for having me.
Right. Farah, right off the bat, OPEC Plus members have now extended their 2.2 million barrels per day voluntary production decline into the first quarter and will begin hiking production incrementally between April to September. Now, what is going to be the impact on the prices? And, is the focus, shouldn't the focus be on bolstering prices by extending production cuts?
Also, I want maybe market participant, investor to understand what happened during this week OPEC Plus decision. We saw the spike in prices. We need to remember production data that we saw from China came better than expected. In the US as well, it came better than expected. Allowing the fact definitely that we are expecting to keep production as it is right now for another 3 months. That was the major, I would say, headlines or rumors. And today we just saw the market benefiting from this rumors, buying the rumors, selling the fact kind of move. And this is why we saw prices declining on oil. I believe the move would be minimal. Yes, we can see good data coming from the US and China. And this is why I am expecting at least no major moves on prices till the end of this year. But given I would say, the forecast of next year, we are expecting higher supply, especially we need to remember from the US. And this is part of Trump major slogans to maybe exceed production more and more in the US. And given a potential drop in demand, at least till Q2. So I'm not really expecting spike in prices. It might be still supported till the end of this year, but next year, Q1, it might be also under pressure.
Right. I'm coming to what you just said. It looks like a classic case of buy the rumor and sell the news, and that's why I know, major price movement happening on oil. But as you mentioned in the second half of your answer about the Trump administration, now that Trump is in office, who has led his electoral campaign on the pledges to further unleash the output of the world's largest oil producer, is the oil market likely to rise by the year end on expectations of a US economy recovery under the Trump administration?
Even if it does, it will be moderate. We have major players who are ready to jump in. OPEC Plus, for example, they control 50% of production globally. So they are always ready to bump more oil in the market. Given how much supply we are maybe tamming at the moment or reducing at the moment, I would highly expect a spike in prices if it's not artificial. Yes, there is major players in OPEC Plus, for example, Russia, as you've mentioned, Saudi Arabia, which they would prefer to have higher prices than more share in the market. So it all depends also on policies from different players. But I can see as well different players in OPEC who would prefer to push more production. UAE, for example, they would prefer to even maybe add 300,000 barrel per day. So this whole, I would say, different aspects of the oil market give me the impression that there's always possibility to remain balanced between supply and demand. My major fear would come from the US, from a major spike in production. So overall, there's no major scenarios that would make me see prices go over $80 per barrel in 2025.
All right, you don't see the prices going over $80 a barrel in 2025, but several OPEC Plus members will also be postponing the unwinding of the second 1.7 million barrels per day cut until the end of next year. Now, this latter production decline was previously only set to last through 2025. What does it speak of the demand outlook? Does it paint a very grim picture there?
That's also one of the major maybe bets on why I don't see prices spiking beyond $80 per barrel, is that we do see better than expected data, but not enough to encourage us to maybe buy the dip of oil. China still, for example, the second largest demand for oil globally, it didn't really show major sign of sustainable growth, sustainable recovery. So we really need to see maybe more sequenced, better data coming in to actually bet on supply from China. Given the possible tariffs either on China or different countries and possible extreme policies from Trump, I think it might affect growth. It might affect global demand, global trade, which by default, it will be also affecting production and oil demand. So by that, I still believe that the major scenarios point to lower oil prices in 2025.
Also, speaking of the demand, China, the biggest importer of oil, hasn't, as you mentioned, hasn't shown any promising demand coming in or any signs of a real recovery on the economic front. What is really the likelihood of a demand recovery? Do you see that, in the future? When do you see that happening, a revival in demand?
I mean, I need to see major recovery in industries and part of the economy that's been suffering the most. I'm seeing either real estate, consumption, even government-related businesses in China, they are still under pressure. I didn't see actual recovery in that. My bet would be BRICS and the relationship between China and other BRICS countries. My other bet would be in industries such as automobiles, such as electronics, that have these industries are linked in a very strong way to the US economy. So any spike I would see in tech industries and semiconductors and automobile, probably it might also affect China. So it's honestly, I'm just betting on these small sectors that they might see good growth. And this is why I'm expecting probably a recovery on the demand for oil. But it's still just hopes. It's just still, I'm indicating possible scenarios that we need to look at during the Q1, Q2 to actually expect a growth. Nothing beyond just maybe to keep it under our radar at the moment.
Right. Farah, one last question. Speaking of China, the trade tariffs that Donald Trump has imposed in China, that does not really augur very well. If you look at if China starts dumping, then that would lead to price wars, and that is not going to augur very well for the crude prices either, right?
Definitely. Yes, that's also one of the things that the more tariffs, the less profits, the less possibility for industries to grow. So by default, it's going to affect production. At the moment, we need to remember as well, it's always this way for Donald Trump. It's probably these major headlines, this major threats as a way to start a communication instead of actually seeing it coming to reality once he comes to office in the 20th of January. So still, it's probably, it might not turn to reality. They might sit down and maybe just discuss the way how things are working right now and changing them. So we're not really betting on these words as a fact. We need to see how it will they become a reality or not? And we need to remember, usually this is the way Trump starts a conversation. He doesn't end it. So still, we need to see if the tariffs would become a reality and then how it will affect definitely China. It might affect on the short term, but we need to remember as well the Chinese way of going and maybe creating really good relationship with different countries and BRICS. Then they're opening also on different markets. It might not be as easy as it sounds at the moment to maybe introduce more tariffs that fast on the Chinese products, especially that it might also affect the US industries.
All right, Farah, thank you so much for taking the time out and joining us on the discussion. We will let you go on that note. Thank you.
Thank you for having me. It was my pleasure.
All right.
If you like this video, then like, share and subscribe to ET Now.